Welcome to The Alternative Investor. The Joburg-based alternate exchange A2X turns 4 this October, saying it has provided savings of 400 million rand to the industry in the past 12 months through lower exchange fees and narrower bid-offer spreads on trades. A2X, which began trading in October 2017, currently only has an exchange license for secondary listings of companies and exchange-traded products. For more, we're joined by A2X CEO Kevin Brady. Kevin, thank you so much for your time. I mean, let's talk about this 4-year journey. I mean, how have you found the landscape? Let's reflect back on the 4 years.
Well, good morning and thank you. And yes, it's been an incredible 4 years. But I will say it hasn't been without its challenges. I mean, obviously for everyone, COVID has thrown a spanner in the works and definitely laid things. But there have also been a lot of other learnings along the way. I think one of our first learnings was in terms of convincing companies about the merits of a secondary listing. I think as early stages took a little bit longer than we expected, but I think we're in a very exciting position now because, we've got 56 listings, combined market cap of around about 5 trillion. And we're finding that momentum going along quite nicely and getting easier and easier. The other challenges we found really have been on the broker side, actually, around infrastructure. Brokers are designed historically just to look at one market, and to work with brokers to what we call operationalize, to allow them to trade seamlessly across markets, again, was probably a bigger challenge than we had expected. But, when I stand where we are now and I look back, I think we've done a hell of a job, and very proud of the team of people that have managed to do it.
For the benefit of our viewers, I mean, take me through what it takes to run an exchange.
Well, it definitely keeps you occupied day and night. Look, the key thing about an exchange, obviously, is your technology platform. And I think we're very fortunate. We license our technology from an outfit called Exchange, which is a new exchange in Europe, actually. And they've got about 6% market share, hugely successful. So really getting your technology platform in place is key. And then, that needs to be able to cope with huge volumes and be resilient. Once you've got that in place, clearly you want to push the trades through. So that's two things. That's about product, and it's about brokers being able to trade. So those have really been where our two key focuses have been. Obviously keeping an eye on the technology, but then, adding product and brokers and trades. But look, we're a small team, but having said that, made up of really experienced individuals who are experts all in their area, who've gone the extra mile to make it happen.
Take us back to around about that year, 2017. The decision to, start with secondary listings first versus primary listings, was that a strategic decision, or was it because regulation made it so?
No, it was an absolutely strategic decision. In fact, we did a lot of research on challenger exchanges internationally. And the one that had been most successful actually target the secondary market first. They build up a brand, reputation, credibility, profitability, and then they move into other areas. So, it's very hard to start an exchange listing one company at a time. You need an awful long funding runway. So, yeah, we looked internationally, and we have a big secondary market, so let's get that right. Let's get the business to a certain critical mass, and then with that, there are other opportunities, of which one obviously is primary listings.
Based on that, then, what do your projections look like timeline-wise for you to start now looking at primary listings?
So, look, it's probably 2 years away from where we are now. And the reason for that is, as I say, we want to hit certain milestones in the secondary market first, and we don't want to defocus the team from that. But yeah, we do want to get there in the end. And it's obviously important, right, for any exchange to have that pipeline coming through. As I say, once you have a lot of companies listed already, obviously it makes life easier to move into the primary. So I would guess, we're probably 2 years away from that, but it's a nice opportunity for us.
How easy or difficult is it to get companies to consider a secondary listing?
Look, in the early days, it was hard work. In fact, we opened our doors for business with just 3 companies, actually. And now, as I mentioned, we've got 56 listed securities. One of the big challenges is that there's a perception that a secondary listing comes with costs, with extra regulation, with risk, which it doesn't. It has none of those. So trying to get through the door to decision makers as a first step, that's a difficult thing because they just perceive as extra costs and work. Once we're through the door, it really is an education process around, why is multiple exchanges a good thing, not only for South Africa, but for your company to list on. Once that we're through the door on that, they all take it to the board for a decision. If the board pushes back, unfortunately, it takes, another 2 or 3 board meetings before you get back on the agenda. So that combined with, COVID, because obviously the focus and the priority was on COVID, has made periods of it difficult. But, I say that in the last 12 months, we've added 20 securities to A2X. So it's been surprisingly successful in a difficult period. And with the quality and the brand of names that we already have listed, it is becoming easier and easier.
Right. To what extent do you work with the other alternative exchanges, if at all?
Yeah, so look, it's a good question. We recently broadened our license to allow the secondary listing of companies that have a primary on alternative exchanges or proved alternative exchanges. I mean, the one being the Cape Town Stock Exchange. So we have been engaging with them. In fact, we have a good working relationship with them. And we are looking to secondary list actually one of their companies, TWK, before the end of the year. And I think that's a great endorsement of seeing alternative exchanges kind of work together for mutual benefit. And it gives an opportunity to provide companies with actually a full service offering somewhere else. So, they can now have a primary listing, they can now access the retail market, and they can access the wholesale market. So we do see it in the medium term as being quite a nice opportunity.
Moving slightly off tangent here, but is there still an appeal for listings, or, are companies sort of putting it on the back burner because of the state of the economy, or is it more attractive to go the private equity route? I mean, where do companies sit right now?
So look, it's a good question. I mean, obviously, because we don't do primaries, we're not having that conversation with them. But our reading of the situation is there's a combination of factors. I mean, one, it's not like the macroeconomics of South Africa is particularly appealing to encourage new listings. Secondly, they are, listing on the exchange is competing with private equity who've moved further up the chain, and it's simpler and not as complicated. But I also think what's important is the regulation and the cost involved with the primary listing might have swung too far, and it's also being a bit of a negative for companies. And I think from an exchange perspective, I think there's more work that can be done in that space to try and entice and encourage, new listings.
All right. Speaking of more work, what are you and the team working on right now?
As I say, our focus for right now remains there's 2 key things. It's to continue to add listings, and I'm excited to say that we have quite a healthy pipeline, and we're expecting to see a handful of listings between now and the year end. And the second thing is we're working with brokers to operationalize them. We have 5 of the 6 biggest brokers, all members and trading and active on A2X to varying degrees, but fully operationalizing them so that when they wake up in the morning, they just buy and sell at the best price, that tap into liquidity. And what we found is once they get over that step, we see an absolute jump in liquidity.